I like to follow the NASDAQ market. It's down now about 33%, and I believe it's got another 8% going down to about 41.3%. And that'll take us probably into February, and that's when fourth quarter earnings for tech will come out, and they're going to be down. Advertising's down, and then savings are down, and money's down. And this was all caused as a result of the $9 trillion that we threw into the market in 2020. And now we're going to have to pay it back. And I'll show you on the chart, it's pretty evident where it's going. But the other thing that I think is also evident is there's some places you can go and make money. And that's what I want to touch on as well. It's not as dismal as you think. It's just going to be a little rough, and you got to be in the right place at the right time. Let's talk a little more after I tell you I'm not your financial advisor.
Best of Us Investors presents Carrie Griegmeyer.
Let's start with how we got in this mess in the first place. And this is a chart of the QQQ, Invesco's tracking of the NASDAQ. And as you can see here, I got it starting somewhere around 2018, August of 2018. And in 2018, we had a national debt of $18 trillion. And we just kind of clicked along at adding to it at about $1 trillion a year. In 2020, it was $20 trillion. And then the coronavirus came about, and the government said, we got to keep this economy rolling. So they threw $9 trillion, actually increased the money supply by 40%. And you can see what it did to the NASDAQ market. It just kept pushing it higher. And then we had to get that money out. And it went out by running up the prices in the NASDAQ market and a bunch of SPACs and cryptocurrency and everything. And you can just see the market just kept climbing, even though we slowed down on our national debt. Since 2021, it's up now from 29 trillion to 31. But still, that money was in the market and it flowed up. And then in November of 2021, the market started saying, "Hey, we've got inflation, we got supply chain problems, we gotta correct this." And Jay Powell came in and started his game of bringing down inflation. So it's a natural cause of the $9 trillion that came in. So the question now is, okay, we understand how it happened. How are we going to get out of this, and how long is it going to take, and where's it going to end up? So as you can see, this is what we call a Fibonacci retracement. It basically says anytime you have a substantial run up in a market, that it's going to retrace itself once the overexuberance goes away, and it'll come down anywhere from 50% to 78.6. Well, you can see the NASDAQ's already covered the 50% retracement. It did that back here. Well, it's done it a couple of times, and but it hasn't come down to the 8.6 historic. So where it's at right now is, if we put this right here on where it's trading today, it's at 33.8%. So my question is, if we know that earnings are going to be bad, particularly on tech, and that consumer consumption is going to go down, and 90% of our GDP is relative to consumer consumption, I think it's fair to say it's going to come down, and I think it's going to come down to where it was in March, when we became aware of the coronavirus. So we're going to erase all this $9 trillion, and we're going to come back to where we were in March when we started learning about the virus coming from Wuhan, China. And that'll bring us down to here. And that's my 41.3 or 43.1. So that's where I believe the market will end up. and it'll probably be after the fourth quarter reports by the NASDAQ market. You can see that if you look at the earnings per shares history of Amazon, Google, Microsoft. I've done a video before where I showed you what I thought the fair values of those stocks were, and so that's where I think it's going to go. Okay, that being said, where do you go in the meantime? I hope you followed my lead and you're in about 40 to 50% cash. My belief is there's some opportunities that we need to take a look at in the between now and the mid-February range. And so let's talk about those. So where do we put our money until the end of February? Well, I believe, and you've seen before, that I believe that war is in our future, and that Lockheed Martin, Northrop Grumman, and Raytheon are good investments. I also believe that these wars and the coming winter are going to put oil in a good place. Take a look at these headlines I just came across today. U.S. Northwest is hurt. These headlines I just came Take a look at these headlines I just came across today. Bloomberg's U.S. Northeast is hurtling towards a winter heating crisis. Fortune magazine, the crisis is coming. Heating bills will jump 28% this winter in nearly half of the United States. That's on top of our grocery prices are going up, gasoline's going up. Again, the Europe situation, the U.S. today. The invisible crisis already behind on utility bills. Many Americans face tough winters. This means that energy, as I say, heating bills are going up 28%. I live in Birmingham, Alabama. I can already see my heating bills going up. And this is from the U.S. Consumers Reports. Northeast region is rationing oil ahead of winter heating crisis. So this isn't only just happening in Europe and Germany. This is happening in the United States. So with that in mind, I've put some of my what was cash in back into energy. So these are the stocks that I've moved into to take, I guess, to profit off of this energy crisis that is in front of us. Devon Energy is a exploring company, oil and gas exploring company in Texas, and I think it's grossly underpriced, and it pays a 8.62% dividend. Cheniere Energy is the largest liquid natural gas provider or producer in the United States or in the world, and they have sold everything that they've got in between now and 2025, and a lot of it's going to China, and this is liquid natural gas. As I said, they don't make money at this point because it's basically a new industry, do pay a 1% dividend. And then I'm in Matador Resources. Again, this is a oil and gas exploration company there in Texas. They pay a 7.3% dividend. And again, I think they're grossly underpriced. I think the fair price is about $160, and I purchased it at $65. And then I have Occidental Petroleum. I followed Warren Buffett's lead on that. It pays a little bit of a dividend, 0.83%. And again, based on our earnings per share price of 15, which is substantially low. It should be selling at $150, but I purchased it at $69. So I think there's there's some opportunities here. Now, why are they selling at prices below what I think fair value? Because the overall market is down. I think there are some very good opportunities. And will the market come back? I don't think there is any question that the market will come back. We're going into the last 40 years have been very innovative. The digital revolution, the social media revolution, the power of big data. Everything has just exploded and then super exploded as a result of, as I showed you, the influx of $9 trillion. But once that's done, we move into the area of artificial intelligence, machine learning, genome sequencing, genome editing. It is, and then right behind that is quantum computing. Our world's going to change dramatically. And what I want to emphasize to you, particularly if you're young, right now is a huge buying opportunity. I say right now, but the huge buying opportunity is going to come when this market settles down to its low. And as I said, the NASDAQ, I believe that's down another 8%. And I think that it will settle at that level right after fourth quarter earnings reports, which will be in the first 2 weeks of February. But in the interim, I think energy is strong, and I think the war machine is strong. So I've talked about those in the past. I hope you're up to speed on that. If not, come to our Discord and join our tribe. We're going to try to make you a better investor and also teach you some good financial planning trips. That's on the docket for right after the first of the year. I'll keep you more informed on that. If I don't see you before Christmas, have a Merry Christmas or a Happy Hanukkah, and let's go into the new year with some positive thinking, because I think next year we'll say, do you remember that a year ago? Talk to you again tomorrow.